This was one of my best trading weeks so far this year. Now, this week I actually made a bit over $42,000 trading SPY options. I'll show you exactly what trades I took, breakdown of each trade, and the exact number of contracts I used in each trade. I'll break down everything in this video. So let's get right into it. Right now we are looking at the S&P 500, the SPY symbol SPY. Now, again, I'm just kind of explaining a bit extra stuff in case you're a beginner, so you'll know exactly what I mean. Now, the 1 hour chart is what I'm looking at right now, so I can show you an example of the exact trades I took in order to achieve these profits of $42,000 within a week. Now, as my previous video showed, I do use supply and demand trading methods, and I use these types of trading tools in order to figure out where price action is trying to lead us. So over here, I had seen that we had broken through this zone right at the bottom. Many times this zone has shown a lot of support in the past. It has been able to hold the price at this level many times, but we had recently broken through it again with the most recent economical news, with the new presidency and all that sort of drama. There's just been a big crash and a lot of volatility in the market. As soon as I had seen us leave this zone over here, I knew that we had broken into new territory. Now, right here, I took on a big position size of 20 contracts, and I actually had held it till the next day. So this was a swing trade. I had sold at the end of the next day, at least 10 of them here, at least half my position. And then the rest of my position, again, I held for one more day. So this was a 2 day swing trade. And I had sold the rest of my 10 contracts here at the bottom. And this trade profited me $22,475. Now, I just had an instinct right away that I had to take these puts trade right here. I just had an instinct right away that I had to bet for the downside. The day seemed bearish and the bulls ran out of steam. There was a lot of selling volume on the ending of this final day here through the zone, and I had gone through. So as you can see here, after the big win of $22,000, I had actually taken a break from trading. I did not trade the next day. One of my biggest rules when it comes to trading is you have a very big win or after you have a very big loss, then the next day I simply do not trade. It's quite straightforward. Otherwise, I notice that my emotions can be too high. I might not be as accurate as I want to be with my entries and exits. And overall, I won't be able to articulate my trading style and be able to dial in into the market as well as I want to. So I always take the day off after a big win or a big loss. Either way, that way I can have some time to reset myself and just to get myself in order. Now, after a day of resetting myself, I decided to take on calls. Now, I had seen that there was support being established here. Now, this support line was marked weeks ago, meaning that I had actually taken the 1 day here. I'll show you. On the 1 day, you can actually see that the line was actually used for previous support and resistance over here. The supply and demand area, it was used as a resistance point before, as a major selling point. So I knew that this area was an area of confluence from the 1 day chart. So I waited until we had seen price action confirm that we were holding this area of confluence overnight. And we did that, right? This area over here is overnight data. As soon as the market opened, that we were actually starting to go up to the top and there's less and less selling volume and more buying volume. So I knew that we were able to actually hold and have a potential to go up to test the previous zone that we had actually left. So this move actually paid off really well. It was actually a $13,455 profit on this move just off of 10 contracts. Again, this is due to a couple things such as the deltas. In SPY options, there are deltas, so meaning that if there is a lot of buying, contracts can become overinflated in value and you can sell them for a ridiculously high value. So that's basically what happened here. I had seen support hold. I'd got in with just 10 contracts because, again, one of my biggest rules is after a big day, after a big win or big loss, I always size down because you can always make the mistake of over trading and going off tilt if you keep sizing up and you're having too many wins or too many losses. You always have to keep a balance when it comes to trading. On to the very final setup here. I had seen that we were getting rejected at the zone. We see this big gap up. We can see right here, there was a big gap down. Now, after the gap down, I had noticed that there was a big rejection wick right over here, and we could not go any higher. So I had entered right over here on the first red bar and sold at the first green bar right over here where I'd seen a big support wick. And this trade actually held me $11,450. Again, I'd gone in with a small size of only 10 contracts, but it had paid off. Again, I did use 0-day expiry contracts, so I did use the deltas to my advantage, but it was risky as 0-day expiry contracts can obviously they can go in the opposite direction of the value that you're betting towards. However, this did work out in my favor this time as I had read price action previously ahead of time across the last couple days, and it was a great entry and a great exit once again. And that basically about covers all my entries and exits for all my trades. Now let's take a look at the PowerPoint real quick and just go over it real fast. Alrighty, so this is the PowerPoint. I actually just want to break down exactly what I used in terms of skill, execution, and risk management in order to spot the right setup. So these are some of the key steps for the overview in order to execute such trades that I took in the examples I showed you guys. First point, SPY was approaching a high confluence zone, exactly the zones that I was showing you, the area marked in green. As soon as I had seen it get broken, I knew to go in with a big size. I knew that this was going to be a big move just based off the history of that zone. Now, supply and demand levels lining up with VWAP is crucial, and with the economic narrative, right? If we see that there are negative news when it comes to the economy, we can expect for a puts day, we can expect for a bearish day. And vice versa, if we see that there's positive news with the economy, we can expect a bullish day. But again, we have to wait until price action proves it to us, right? As the institutions do control the market, and we have to wait until they decide and align together in order to decide on a direction as to where the market should go. Similar to what I just said, clear shift in structure, multiple time frame alignment. Now that's exactly what I was showing earlier in the charts. You want to be using the 1 day, 1 hour, 30-minute, 15-minute, 5-minute. You want to use as many time frames as possible to confirm your entries and to confirm your exits. That is extremely vital for and important for trading success. And again, another point that I kept covering in the examples that I showed you, volume confirmation gives you confidence to size up or size down. It lets you know it's a key factor of understanding where the market is going to go. Again, at the bottom, just a little quote. This wasn't about chasing. I waited for confirmation. I scaled in and respected my risk. I knew to only go in with a size that I was okay with losing with. I didn't overtrade. I didn't go with something that's too big of a size. I made sure to stay comfortable. Even if it's just trading one contract or two contracts, that still works. All that matters is that you put up a size that you're comfortable trading with. Don't ever oversize your account. That is one of the biggest rules ever. Three things I did right that made these trades work. These show that I was systematic and not emotional. One, I waited for clean confirmation, no FOMO entries. Number two, next point, all in. Managed all in, meaning that I entered with full size right away. I didn't scale in. As soon as I had seen my confirmations go off, I entered with full size and then I scaled out on one of the trades. But for the most part, I went all in and all out. I handled these setups quickly and I did not waste too much time on scaling out slowly. Now, I managed my size across the zones and didn't blow my account early, meaning what I said earlier. I started off with only trading one or two contracts at a time until I was comfortable in my strategy, until I had seen proof in it. Then I started to scale up to 5 contracts and then 10 contracts. Whenever I do see an A plus setup, I go in with a very big size all in right away with up to 20 contracts at a time. Now, final point, I let my winners run. Whenever I do see volume carrying the day, I let my winners run. I don't take profits too early. It doesn't, just because you see green doesn't mean that you should take profits right away. You have to let your winners run and cut your losses early if you do see losses. It's quite simple. Took partial, but let a core position ride with a trailing stop, meaning that I did have a stop loss for all of these trades. I didn't have a crazy loose stop loss like many traders do. I kept it tight and proper. With the very big 20 contract trade, I made sure to at least sell half my position at the first set of profits. After that, I let the rest ride out, and I collected my profits at the nearest resistance. Most traders count winners too early. You gotta let the market pay fully this time, meaning you gotta let your take profit be hit. Don't take yourself out of the trade too early. A lot of times traders take themselves out of the trade way too early. All right, so now the exact opposite. 3 mistakes to avoid in order to have a successful trading week. 3 things to avoid or you'll blow your trades like this. entering too early, entering too big too soon leads to emotional exits, meaning that you enter too early, you went off FOMO, and now you're starting to get too emotional and you want to get out of the trade, and you end up getting out too early regardless, or you end up getting hit with your stop loss right away before the move ever actually takes off. Entering too early is a complete account killer. Never do that. Number two, fighting the trend. Just because price is extended doesn't mean it'll reverse. Exactly what I was talking about earlier, where once you see price break through a certain zone, you still have to wait for at least two confirmations before you decide to go in with a reversal trade. Now, number three, ignoring market context. Always zoom out. The one time frame doesn't tell the full story. Like I was saying previously, use multiple time frames. Use the 1 day, the 1 hour, the 30 minute, the 15, the 5 minute, and even the 30 second. Get it really up close to it if you're going to be doing scalping. The more time frames, the more accurate your trading will be. Final points to take away here. It wasn't just the setup, it was the execution. Mastering psychology is more important than just calling moves. As I said earlier, you can point at a chart, you can always talk about different zones, different support lines, but it really is all about what you do within the exact real time of the day, as trading is a second by second, minute by minute sport. Just talking about setups is not good enough. You have to be able to practice discipline in order to execute flawlessly. Now, the next point. Risk management makes big trades survivable, meaning that if you do end up taking a loss, if you end up at least managing the size of the trade that you do take, at least your account will survive. First, if you go all in with all of your capital, you'll end up wiping your account within 1 week. Now, final point, repeatable edge, not randomness. Trading is not just a random game. It's all about repeating the same edge over and over again until you see it not working. Obviously, the market fluctuates all the time, the market currents change all the time, so your strategy will have to be tweaked and set up differently over time. However, as long as you keep repeating the same similar edge, you will see similar results. That's that simple. One great trade won't change your life, but stacking disciplined ones over time will. Meaning, all the small wins that you do take day by day will add up to a big week of profit. And before you know it, you'll start earning a lot of money monthly, yearly, and so on and so forth. So treat every single win, no matter how big or small, with a lot of appreciation because trading is one hell of a sport. It's very difficult and only few people can actually master it. Alrighty, thank you for watching. If you guys are serious about learning more about trading and leveling up your life, definitely check out my Instagram, give me a follow there, send me a DM if you're serious about leveling up. Check out my TikTok as well if you are looking for knowledge. Definitely check out the Trading Legion. That'll be our new community on Discord. We will have openings coming soon. It's an exclusive private community, so we will be releasing a waitlist for you to join and keep an eye out for all the links. And we are very excited to build an awesome, dedicated community for trading and leveling up your life overall.